Okay, welcome to this video on the revaluation of land. Now, land is a non-depreciable asset, and at this basic level of accounting, this is the only sort of asset that we look at that is being revalued. So the question is here, how do we go about revaluing the land asset? Now, the first thing to understand is that land, of course, um, is a PPE asset, and the accounting standard, see, that deals with that is IAS 16. And in terms of IAS 16, we have the option to have our asset either at cost or the revaluation model. Okay, and the nice thing about the revaluation model is that if we have our land on the revaluation model, then we always have our land at a value that is indicative of its fair value. So how do we go about doing this revaluation? Well, let's imagine that we purchased, okay, our land initially for 100 Rand. And so we initially purchased it for 100 Rand at the beginning of the year. And in this case, we're going to assume that at the end of the year, this is when the business is doing the revaluation. So at the end of the year, okay, at the year end, the fair value of the land is now 120 Rand. So how do we do this revaluation? Well, okay, we can see that the value of the land has indeed increased, and that increase is 20. So it's gone up by 20. So in this case, that would give rise to a revaluation gain. So we would then say debit or credit at least, sorry, the revaluation gain in other comprehensive income of 20, and we are going to debit the land with 20. Okay, and this revaluation gain must be closed off to a revaluation surplus. So in order to do that closing journal entry, we would say debit the revaluation gain in OCI 20, and we are going to credit the revaluation surplus in equity, which is 20. Okay, now what happens in the future? So let's say that next year, okay, the fair value of the land now is 110. Okay, so at the beginning of the year, it was 120, and now it is sitting at 110. So that means there was a decrease in the fair value of the land of 10. Okay, so in this case, we actually have a revaluation loss. So we're going to say debit the revaluation loss, also in OCI of 10, and we are going to credit our accumulated impairment of 10. And that revaluation loss again is going to be closed off to our revaluation surplus. So we would credit the revaluation loss in OCI of 10, and we are going to debit the revaluation surplus in equity of 10. Okay, and that is, I think this is basically at a very simplistic level, or the basic level, what you need to understand about revaluations is that the revaluation gains and losses, they are going to go through other comprehensive income. And once we close it off, we're going to close it off to a special equity reserve called a revaluation surplus. And that surplus will sit in equity along with all the other equity reserves like retained earnings and the capital reserves and so forth. Okay, so that's just a basic overview of how you revalue land. And I would encourage you to think about, okay, so let's do a little additional exercise. So think about the impact on the statement of changes in equity. Okay, so for yourself, go and do a little statement of changes in equity and think about how these journals are actually going to impact the statement of changes in equity. Okay, I hope that video was useful for you, and I will see you in the next one. Bye bye.